Hello, hello. Good morning, everyone. Good to see all of you there. A few people on right now, which is great. Great to see you guys. Alison, Di, Nick, Nicole. Morning to you guys. Yeah, how's that, eh? Christmas coming soon, folks. Christmas coming soon. Round the corner. Sean, morning, mate. Great to see everyone jumping on. Do the quick intros while we wait for a few extras to dive in and say g'day. But Jason Witten's my name. If you're new, most of you guys there, I'm sure, know my name by now. But if you don't, welcome. If you're newbie, say hello in the chat. A few people join mentoring and find us out there. So welcome to you guys. And been property investing over 20 years myself, coaching property investors over 18 at Positive Real Estate with my compadre Sam and my team across Australia and New Zealand. And each morning, most mornings, last week was a little bit patchy, get together with you guys, have a bit of a chat, talk about property investing. We've got some sayings around here. There's two important things that we have as a foundation of what we do at Positive and our coaching and property investing. Number one, this thing's a marathon, not a sprint. Wealth takes time. If you're here for get rich quick, press unfollow, press stop right now, because this ain't it. This ain't no get rich quick concept right here. This is about owning great real estate. Buy well, never sell is the other catch cry we have around here. So if that sounds like you, then awesome. You're in the right place. Let's talk, let's chat. This is what we call a wealth coffee chat. Monday to Fridays. Last week, I was hanging out with some cool, crazy crew. I belong to two networking, education, personal development, business development programs. One is a guy called Taki Moore. I love him. He's an awesome guy. And another guy called Kerwin Wright. And last week, hanging out with Taki. This week, going to hang out with Kerwin and the crew. So my morning wealth coffee chats might be a little bit shorter. Last week was a bit patchy. But anyway, hopefully you guys are awesome and well. Today I wanted to quickly talk about some headlines out there and whether they matter to us. I don't know, has anyone heard or seen these headlines out there? You know, clearance rates on the decline. And, let's have a bit of a look at what that looks like. Let's see if this works here. It's not very big, is it? Let's try that. All right. The quality's a little bit sketchy there, but hopefully you guys can see that. Let me know in the chat if that's looking fine. But I don't know if you guys have seen this in the marketplace out there in the news. Clearance rate decline as auction volumes steady. Property clearance rates have steadily declined in recent weeks. Another good one, a good sign for buyers. Hey, that's not a bad idea. A sharp drop. I love this. I love how they, really get in there and dramatize. Sharp drop in the number of auctions. Warren, I'm the same as you, Warren. I'm like, okay, better put my glasses on. Oh yeah, that's heaps better. Heaps better now. Heaps better. There you go. Morning, Danny. Morning, Warren. Pawan. Good to see you, Laura, Simon, David. Great to see you guys in. Anyway, you guys can see the drill here. Listen, a lot of chatting about, clearance rates dropping, blah, 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 right? They like to ham it up. You guys know this. You guys have seen this before. We talk about it all the time. If you're going to listen to a source of information for taking action, the media outlets are not, I repeat, are not the source of information you should be taking action on, because it's an interesting one. The market's crashing. It's so it's a study in human behavior, right? Now, team, the number one risk in real estate investing, the number one risk to our portfolio values. Number one risk. You guys tell me in the chat. We talk about this all the time. But what is the number one risk that often we can't do much about? Chuck it in the chat for me as we go. Because here's the interesting thing. This one is a a study basically in human behavior, because if we have a future, this is our future, this is our plans, this is 15 or 20 years in the future. No, Nicole, it's not interest rates. What is the number one risk every investor faces in Australia at this point in time anyway? Policymakers, dead right, Alison. The governments, okay? Interest rates go up and down, Nicole. Again, you can't do anything about them, by the way. You're right about that. But it is the politics, dead right, Danny. It's the politics of what happens. It's political grandstanding and stupidity that gives the volatility an extra twist, an extra sting, or maybe sweetness, depending on which way you splice it. So let's have a bit of a look at this. You desire something in the future. You have a goal in mind. You have, 5 to 6 investment properties into the future in your mind. And, how we believe things will happen is into the future. We want to see, investment property 1, investment property 2, 3, 4, and 5, and 6. And so, for all of us, those decisions, those waypoints may happen, fast. It might happen over time, depending on where you sit as an investor. That might happen anywhere between sort of, wrong pen. Give me a sec. 0 and 20 years, okay? And it's not linear. It'd be lovely if it was a graph like this, but often it's more like this, isn't it? You might go, you might get sort of like this, 1, 2. Actually, that's a rubbish color. Let me do this. This one looks good. You might get, you start out and you go yes, and then you go brrr, yes, brrr, yes, like this, right? And investment 1 and 2, and then over here you get investment 3 and investment 4, investment 5. So it's not a linear process. You guys know this. And what I do know, in these moments in time, these kind of flat moments, right? Flat. And sometimes not in acquisition, like number of properties, but value, sometimes those flats can have a decline. And this is the conversation we're sort of having indirectly today about, clearance rates dropping. Nicole's sort of saying, the market's going to crash because someone's telling me the market's going to crash. Don't buy. And if you are making decisions, in these moments, this kind of 1 to 2 year moment, right? This is where you're sort of going, your vision, your future, why you are doing this is so narrow that it's a in the moment decision. It's like a 1 to 2 year, what happens if auction rates do drop? What happens if values do go down in the next year? And that, ladies and gents, is the biggest danger, because what can happen is you can end up with a trajectory of pretty average, a negative trajectory, if you break this into like little moments in time, 1 to 2 year moments in time, right? Because you can be derailed off of a plan, in a flat time and end up down here. And I've seen it so many times, all right? So let's dive in and see, all right, well, what is going on? Let's check some facts. Let's check some history. Let's have a bit of a look at this when it comes to some of the data, because, the headlines, the sky's falling, Chicken Little, the market's crashing, don't buy, okay? But what's going on? Let's have a bit of a look at some data and have a look at auction clearance rates. If you can have a bit of a look at that, yes, we've had a bit of a decline, but, tell me a decline from where, folks? Can just check out this line here, it's a bad it's a bad crooked line. But tell me what, where do the clearance rates have to go, folks? Okay, up here, these clearance rates are and have been for many months now, well above, an average, or not an average, but well above, a high point, and sitting in some quite record clearance rates for quite a while. The challenge for us as property investors, team, now just, think about this, is that when we are sitting there at home, we have to make sure our understanding, go back to this thing. Our understanding of the marketplace is not really in this moment. We're not narrow. We're not narrow in November 21. All right, okay. We're not narrow in our question of, what's going on here. Oh, November 21, auction rates are going down. Oh, right. We open our scope of information and understanding, and we look across time and go, yeah, okay, that's fine. Check this out. Check out this record low here in November 19. Well, it might be a bit lower anyway, but that might have been at the beginning of 2020. Check out this decline here. Check out that decline there. See this 3-year decline here, folks. Oh, yeah, 2.5 year decline. Tell me what happened in that 2.5 year decline right there on auction rates. Shout it out. Tell me in the chat right now. I'll have a sip of my coffee. What happened from late 2016, it was like early 17 to sort of, mid 18. What happened? What happened to that record decline in clearance rates? What caused that? Anyone remember? Because it's sometimes a value or a benefit, but sometimes it's actually a negative for our short-term memory for this stuff. Boom. Yep. APRA. And then policymakers said, what else did they say? We're going after capital gains tax and negative gearing. APRA investigation, which was a bloody farce, right? And we're going after negative gearing and capital gains tax, all right? It was all a beat up. And what happened? Capital values actually fell around the country. Was that a disaster? Folks, who owned a property at that point in time? Me. Does that mean that everyone oh, that's it, it's over? No. You know what? We had the best buying time in those 3 years of positional buying, position for profit buying we've had in many, many years, okay? Short and negative gearing, exactly, team. Yep. And you've got over in New Zealand right now, David's right. The New Zealand policymakers over there are making some absolute clusters in that marketplace right now. It is going to get worse with what they're implementing over there. But, is that going to be the end of the New Zealand property market? No. But we must be keeping our eye on our long-term future. This is where we should be looking to our future in the future. Now, there's always going to be the APRAs and the policymakers and the changes in governments and so on. For us as property investors, we need to be able to navigate that. And remember, these short moments in time, 1 to 2 years, your acquisition strategy may go flat for a little while, but you can't lose faith. Right now, very sadly, got people who were sort of purchased in Brisbane, let's say 4 or 5 years ago, and because the property hasn't gone up in value or hadn't gone up for 4 or 5 years, they'd given up. They've chucked their toys. Now, that's ridiculous. It's ludicrous to me that that, if it didn't work perfectly, what's perfect anyway? All right. If you buy a property expecting it to go up, immediately in value, you got rocks in your head. Listen to me. You got rocks in your head if you think, oh, the market's booming, so everything I buy should go up in value. What a stupid idea, right? Go and have a look in the mirror and give yourself a little slap around, right? It's ludicrous. That idea is the problem. What we need to do as property investors is we need to buy our real estate because we want to own it in 20 years' time. That's what we're doing this for, folks. That's what we're doing this for, all right? The idea that you're buying it just because it's going to grow in value and if it doesn't, you're going to chuck your toys, that is childish. That is short-sighted, all right? Anyway, a little bit of a moment today. A little bit. There you go. But anyway, folks, the point is there's some headlines out there. We, as good quality professional investors taking this seriously, building our portfolios, will not make decisions based on small moments in time. Okay, we won't. We make decisions based on our long-term goals and keeping an eye on our 15 to 20-year plan, buying well. We're not going to sell. And we know this thing's a marathon, not a sprint. That's what we know. All right, team. Well, that's it. Wealth Coffee Chat done and dusted. I'll leave it there. Maybe a little bit of a shorter one today, but hopefully it was useful. And Pawan, yeah, absolutely. I'll touch base on the NDIS disability stuff in the coming days. So there you go. All right, team. You guys be awesome. Stay well. Mentoring on tonight. Folks, mentoring. If you're in our coaching and mentoring program, do not miss tonight. 13 cash flow strategies from the man himself, Sam Saggers. I'll be doing a little bit of stuff as well, and it's going to be awesome. So make sure you're there. You guys know the drill. You guys will get the emails and or the invites. If you haven't already, make sure you register and get along tonight. Awesome. All right, gang, that's it. I'm just rabbiting on now. You guys be awesome. See you tonight for mentoring. Adios. Bye for now.